the Bureau of Labor Statistics says it will not release a jobs report for October after the shutdown prevented payroll data from being collected. Instead, that data will be included in the full November jobs report due out next month.
Meantime, the nation is gearing up for the September jobs report to come out later today, over a month and a half after it was supposed to be released. News Nation's Alicia Nieves is on Wall Street with the latest. Alicia, this has been waited for eagerly. No one knows what it's going to be, but there's some expectation of what might be there, right?
Yeah, good morning, Corey and Hillary. A lot of anticipation around this September jobs report. It's the first major bit of economic data we're getting in around 2 months since the government shut down and has now since reopened. But it's also probably the only jobs report the Fed is going to get before it has to make that critical rate decision on December 10th. So in terms of expectations, we are expecting to see that in September, ahead of the government shutdown, we saw some job growth. About 50,000 jobs is the estimate to have been added in September. That would be up from about 22,000 reported in August, but still a signal that we've seen a still softening labor market. The unemployment rate, that's expected to be unchanged, right around 4.3%, but above the threshold that the Fed wants at 4%. So, you know what's interesting with this report, I have to say, typically a weak report would spook Wall Street, but today the opposite likely could happen. A softer jobs number really could increase the odds that we get another rate cut, something investors and certainly a lot of consumers have been hoping for.
It could be one of those situations where bad news is good news, meaning if the jobs number is really, really bad, meaning let's say we lost jobs in the economy, that could be an indication that the Fed will more than likely cut interest rates, and that's what the market will be hanging their hat on.
Yeah, and also here, under normal circumstances, a 2 or 3 month old report really wouldn't heavily influence the Fed. But again, because of the government shutdown, the backlog, October and November jobs report, those have been pushed back and they won't be released about a week after the Fed meets on December 10th. So today's report going to hold more than usual weight. Report's going to drop at 8:30 this morning, and we'll be following it really closely, as well as everyone here on Wall Street and even many people around the country. Corey, Hillary?
All right. So while we wait for that jobs report, we did get an earnings report from Nvidia after the bell yesterday, and markets are rallying. What does this jump say about that lasting concern over an AI bubble?
Yeah, I mean, Nvidia proving why it is the world's most valuable company, a $5 trillion company. In its earnings report, it was a complete boom for the company. Showed $57 billion in revenue for Q3. That was above expectations. The forecast for the current quarter, $65 billion. That's $4 billion more than most had anticipated. Again, both beating expectations and really pointing to this continued surge in demand for AI chips. The stock itself rose 6% on this earnings beat, but also lifting the broader markets. You see there, right now ahead of the open, the Dow's up around 0.4%, NASDAQ 1.33%, and the S&P 500 looking to open up higher by about 1%. This strong report is really easing the worries that we've seen with investors over the last couple of weeks that AI stocks, especially those considered in the Magnificent Seven, the Nvidias, the Amazon, the Alphabet, Microsoft, that they may be potentially overvalued, a little bit inflated, and this could be a bubble that bursts. There were a lot of comparisons to the momentum we saw in the 90s around the dot-com boom and then bust that roiled portfolios and triggered even a recession. And so right now what we're seeing with this report, again, an easing of those concerns as, you know, Nvidia is showing there's truly a lot of demand for these AI chips and that the valuations might be merited, even though those valuations are just skyrocketing. Nvidia doubling in value, several other companies, Google, over the last couple of months with this whole AI boom.